Ladies and gentlemen, good morning. It's a real pleasure to be here, and I'm particularly excited to be at Titanic Belfast. I'm originally from Merseyside, and when I was a kid, the shipyards were still big employers on Merseyside, and so the story of the Titanic is one that I grew up with. Tom has introduced me, and as he says, I'm going to speak today on my top 10 tips for tech entrepreneurs. FirstCapital has offices in both London and in Silicon Valley, and so we take a transatlantic perspective in what we do, and I think there's a lot that we can learn from Silicon Valley and from the US and apply in Europe, and I'm happy to share some of those with you today. I remember one of the first meetings that I ever had with an American investor. I'd just set up FirstCapital, and I was going around meeting people, making connections, and I met this guy, and he said hello. And I said, how are you? And I said, I'm fine, thank you very much. How are you? And I stuck out my hand. He grasped it firmly. He pumped it strongly. He looked me in the eye. He said, tremendous! Whoa. No one in the US is ever, I'm quite good. I'm doing fine. They are the world's leading thinker in their sector. The sales traction that their product is generating is terrific. The customers are giving a mind-blowing response to the product. And so I think my first tip to you is, you, each and every one of you, you're awesome, and you better believe it. One of the amazing things about Silicon Valley is that it's really quite small. It's bounded in the north by South San Francisco and in the south by San Jose, and that's about 40 miles long and just a couple of miles wide. And people know each other. It's very likely that the parent at the school gate is a partner from a major VC fund or a senior employee at Google. But one of the things the Americans do really well is to separate business and friendship. They're really good at friendship, don't get me wrong, and it's really easy actually to meet people because they're very open. They'll give you 20 minutes to hear what you have to say. But in that conversation, very quickly you have to move on, because what they want to know is, what's in it for me and what am I getting out of this conversation? It's not small talk. Companies, founders, CEOs, are quite often created by people who know each other, by friends. And that works really well in the early days because there's trust between the parties. But when it gets to a point where that loyalty to friends starts to hold the company back or starts to limit its ability to grow and scale, that's when you need to really think about what's the right next step. Mark Zuckerberg was really quick to jettison his co-founders of Facebook when he felt that they no longer added value to the company. So my second tip, separate business and friendship. It's not personal. Moving on, this one is for the locals in the audience. As we all know, the Titanic was launched in this monumental show of confidence and pride in this amazing ship. This was a revolution in technology at the time, a revolution in travel. It was fast, it was unsinkable. I often think that actually founding a company has some of the similar dynamics. It takes quite a lot of hubris to found a company, some confidence in your ability to do things better or to change the world, change the status quo. But the important thing is to adapt to external circumstances. one of the things that held the Titanic back, or ultimately led to its downfall, should I say, was this lack of recognition of external circumstances, a failure to change direction when it became obvious that the speed and the direction of travel was needed to change. And so my lesson to entrepreneurs and to CEOs is pay attention to what lies ahead. One of the things the Americans are really good at is taking quick, difficult decisions when something's not working or when things aren't going according to plan. They shut it down. They change direction. So my third tip to the CEOs and entrepreneurs in the audience is, if it's not working, for God's sake, turn. Moving on to number 4, a lot of what we do is working with entrepreneurs around how they finance their business, how they grow. And I very, very often hear from entrepreneurs who've had a tough time trying to raise money, and they say, oh, it's so much easier in the US. Valuations are higher, investors take more risk, money's easier to come by. Forget this, raising money in Europe. I'm going to go to the US and raise money there. The hard truth is, it's actually really hard to raise money in the US if you're from Europe. Americans actually aren't terribly interested in deal flow from Europe. To be honest, they're not terribly interested in anything that isn't a 30-mile drive from their offices. So what you need to do if you are serious about raising money in the US is fully commit. That means you have to move, lock, stock and barrel. You have to up your CEO, up your management team, move over to the US and start building your commercial team and your traction there. Start generating customers. Then you can talk to people. So point number 4 is, if you want to raise money in the US, make it happen. Go over there. You can't raise money from people saying, when I've got the money I'll move, or when I've got the money I'll enter the US market. Do it, make it happen, and then that potentially becomes a reality to raise money in the States. Number 5 then is about how to communicate your pitch to a potential investor. I remember taking an entrepreneur to a meeting with an investor, and he was a successful guy. He'd run businesses before, he had a good track record, he had a great story, all good. So he drove to the meeting and he pulled up in the car park, and it was one of those really irritating car parks where the spaces are just too narrow to fit in comfortably, and you've got to be quite careful, you've got to manoeuvre. And my guy was a little bit impatient and he wasn't careful enough, and so he was parking the car, and there was this crunch and a really nasty dent in the very fancy Porsche in the next space. Unfortunately, turns out that the Porsche belonged to the partner in the fund we were meeting. So we had an hour, and the majority of our allotted hour was spent apologising profusely and exchanging insurance details. And needless to say, he didn't invest. I think probably the best thing that we can say about that experience is that my client certainly made an impact. But the point here is, get your pitch right first time. Make it really count. Make it so that the person that you're talking to wants to hear more. They want to take it further. Because if you're boring, or you go on too long, or you make the wrong points, they're going to say no. And once they've said no, that's it. There's no way back. So get your pitch right first time. Practice it. Perfect it. Talk to people who understand and can give you really genuine feedback, because you don't get a second chance to make a first impression. Tip number 6. This is about data, and this is about a change that has happened since I founded FirstCapital. Venture capital used to be actually quite a cottage industry. Investors would meet somebody, was usually introduced by somebody that they knew, and they would then make a decision as to whether to invest, largely based on a gut feel and some due diligence. But the world is changing. It's very much cheaper to found a company these days. There are thousands of entrepreneurs out there because culturally it's so much more acceptable to start a company than to go into corporate life than it ever used to be. And because of the internet and social media, there are thousands of millions of data points out there. And so what we're starting to see is that venture capitalists are using data to help inform their investment decisions. Alderton Capital in the UK, which is one of the larger funds over there, is one of a number of funds that now employs a data scientist. And that data scientist takes things like Twitter followers, Alexa rankings, mentions in social media, it takes conference presence, a whole bunch of different metrics, and they put that together in a model to create a sense of activity, cluster, what's happening, what's hot. There are other tools, many of you may know CB Insights, which provides data on funding for venture businesses, and they've created a tool called Mosaic, which takes publicly available data and puts it into a predictive algorithm, and then identifies which companies are hot, which companies are fast moving, and they sell that to the investors in order to help them identify which companies they should be targeting. But you can use this to your advantage, because if you systematically invest in marketing and in building your social media profile, you can create a signal and you can create momentum out there and the kind of things that people might pick up on, and that creates this sense of the company being hot and being exciting and getting more interest from potential investors if that's what you're looking for. Number 7 then is all about building a network. Silicon Valley is really, really good at networking. Many, in fact probably most of the people who live in Silicon Valley aren't actually native to the area. 35% of the population is foreign-born immigrants, and then you add to that the number of people that have moved there from the rest of the US, and so this culture of meeting people and networking is really, really strong. So when you're starting out, or in fact at any time in your career, building a strong personal network is something that has amazing leverage that you can really use as you go forward and as you build your career. And in a startup environment, using your network to find mentors, find people who've done it before, who can advise you so that you avoid their mistakes. You might find co-founders or employees to join you. You might find partners or early adopter customers that are going to help you develop your product and take it to market. You might even find investors. So events like this one are fantastic. You know, get out there, network, talk to people, share. Network as if your life depends on it. So you've built a business, you've got investments, things are going brilliantly. At some point, you're going to want to sell. Certainly if you've got external investors, at some point they are going to want you to sell so that they can make some money. And I've really lost count actually of the number of times that people have said to me, I'm not going to sell my company. I'm going to build something great. And then Microsoft or Google or Facebook, whomever, they're just going to ring me up and they're going to buy it for $1 gazillion and I'm going to make loads of money. But the The issue is, if you're based here in Europe, Microsoft or Facebook or Google or whoever it is, they don't know who you are. Their M&A teams are based in the States. They don't have people looking particularly actively at Europe. Most of them certainly don't have people in Europe. And so actually it's up to you to make it happen. It's up to you to build relationships with the key people. It's up to you to demonstrate your commercial value to them. So you have to be proactive about it. They're so tied up with what's going on in their own backyard and so inundated, they simply don't have time to figure out who else is out there. If you can get your head above the parapet and you can get attention, actually there's some really great advantages that European companies have. Because the market for talent, particularly in Silicon Valley, but in other key entrepreneurial areas in the States, is so insanely competitive, insanely expensive, that actually if you have a strong, stable product team with a good level of expertise in your chosen area, that's a real advantage, and that's something that's pretty attractive. And secondly, and it's reported quite widely in the media, but it's really true, there are a lot of US companies that have a lot of cash offshore, and they would really prefer to find a good investment opportunity, a good acquisition opportunity outside the States so that they don't have to repatriate it. So, there is appetite if you can cut through the noise. So, if you build it, will they come? Showing my age here, a reference to a movie that was around a number of years ago. Well, they're not going to come, not unless you make it happen. Number 9, and actually this picks up on something from the previous speaker. In Silicon Valley, in the US, everybody's failed at something. Failure is a learning experience. It's something that you take with you and you do better next time. It's not a personal black mark against you as an individual. There's a fund in the States called Bessemer Venture Partners, and they are one of the oldest, most established, most successful funds in the States, and they publish their anti-portfolio. And in their anti-portfolio, which is companies that they have declined to invest in, there is Apple, there is Google, there is Facebook, there is Cisco, there is PayPal, there is Tesla, a whole host of others that they decline to invest in, and they publish their reasons for not investing, and some of them are pretty stupid. But really, as they say, they've had an unprecedented number of opportunities to completely screw up. So my message here is failure is not a personal, it's nothing personal. It's just part of your entrepreneurial journey, part of the learning experience, and then move on and take it forwards into the next thing. So I've taken you through 9 of my 10. And these are tips that are based on my experience and hopefully give you some things to think about as you move forward in your own entrepreneurial journey. But the last is my personal favourite. Steve Jobs was by many accounts a very difficult man, but he was a brilliant man, and he was also a passionate visionary. And I think this quote for me really embodies something that's very fundamental, very important. Life is too short. You spend a lot of time at work. So love what you do. Thank you very much.